Hello and welcome to Forex Academy, your #1 website for Forex and crypto education and analysis. In today's edition, we're going to be talking about the COVID-19 pandemic Black Swan event. We hate to say we told you so, but we pretty much called this crisis out back in January in our article about how to guard your financial assets against the coronavirus outbreak. Those who heeded our warnings had a great opportunity to convert equities to cash while stocks were at an all-time high. This would have safeguarded them against the biggest equities crash in market history. Other aspects pertaining to the crisis have been largely fluid. With the possibility of a virus outbreak in Japan, initially the USD JPY pair went to bid, targeting the 112.0 handle, and when that did not happen, the yen currency reverted back to being a safe haven. Recently this pair found support at the 110 level, and it is now tumbling and currently trading at 108.70. Similarly, the rhetoric from the Swiss National Bank that they were happy with the negative interest rates and ready to intervene in the markets in support of weaker Swiss franc, which has generally been ignored by the markets, while the USD Swiss franc pair has moved lower and is currently trading at 0.9650, flying in the face of the SNB's threats. Recently, we also saw the biggest daily move in almost 7 months, in an otherwise subdued performance of the Euro-USD pair, which pushed 125 pips higher, and where it hit a target of 1.1050. This is amazing, bearing in mind that only yesterday the German health minister warned of a high probability of the COVID-19 virus causing an epidemic in Germany. This has also led the dollar to coming off its highs of 99.00 on the dollar index to below 98.00 currently, while the market's price is in a 0.5% interest rate cut. And of course, the possibility of supply chains being affected by the virus outbreak and signs of the problem may cause more damage to the US and indeed the global economy. This could be worse than previously predicted. None of this has been helped by the fact that the US equities until last week were bought at record highs, and we do wonder why that was the case, especially as the levels were not supported by traditionally more modest earnings to value calculations, and the fact that the world may have been fed false information from the Chinese government regarding the contagiousness of the virus in the early days, and that they would get it under control. The proverbial stuff really hit the fan when the virus took hold in South Korea, Hong Kong, and Italy, and when that started to affect airlines. They restricted the flight destinations whose stock suffered immediately. Then the second contagion set in, market panic selling. So where do we go from here? The markets are going to be incredibly data sensitive, and will also be focusing heavily on policymakers' decisions with regard to the financial tools they will implement in the event of further escalation of the crisis. Overall, we expect further toing and froing from the dollar index, further flight to safe assets, including precious metals such as gold, yen, and the Swiss franc, further weakness in the Canadian loonie, which has recently found resistance at 1.33 against the dollar, but which has now been punched well above the 1.34 area as oil prices continue to fall. Cable is capped at the 1.3000 level due to its spat with the European Union and the continuing risk that it may not be able to complete the trade deal by December 2020. This leaves the possibility of the WTO trading rules needed to be applied, and then obvious disarray, confusion, and the likelihood of a damaging fallout between the two sides. We expect the pair to find support at the 1.2750. AUD USD and NZD USD both remain southbound, such as their dependence on the exports from China. Looking forward, traders and investors will be waiting on the sidelines for the virus to abate, supply lines reinstated, and positive market data before confidently coming back to the equity space on a buying spree. Until then, expect more volatility and thankfully less tweets from President Trump, who has been noticeably quiet this week. If you enjoyed the video, then please like and subscribe, and leave a comment down below about anything you would like us to discuss in future, or if you have any questions about this particular video. Have a great day.